Okay, hello everybody and welcome to this week's edition of Self-Wealth Live, the technical analysis edition here, right from our homes. Hi Jason, how are you this week?
Hey Rog, I'm all pretty good. Good week in the markets. A few things to talk about today, so that's always interesting when we've got those things to go on with.
Yeah, for sure. I think actually, from what I saw this morning, I had a brief look, and it looks like we're still nudging, and we just hit another all-time high today. So it's looking good. We're good to have a chat about things. Hello, everybody, and welcome on the other side of the line once again. Let us know you're here. Do say hello in the comments, please. What we're going to, obviously, if you're new here, what we do is we go through the three major markets, the indices for the Australian, the ASX 200. We'll look at the All Ordinaries as well as the US markets and the Hong Kong markets are the three main markets we offer at Self-Wealth by SIFE. Look, if you've got another indice around the world that you would like to look at, us to have a brief look at, we can certainly have a look at that as well. If you've got any general questions, we'll go through those. At the end of the show, the main part of the show is us going through your tickers, so make sure you send them through as quick as you can. Obviously, there's quite a few tickers that we have to get through generally each week, we'll try and get through two of everyone's as best as we can, and if we've got more time, we'll get through as many as we can, right? So I will draw a line in the sand, and it'll be in the comments once we can't accept any more as well. But otherwise, I think we're good to go for another great week and another standard week, so nothing out of the ordinary this week. But let's have a look at our disclaimer, please. Thanks, Jace.
Okay, so everything we do is general commentary only. No personal advice is given, and I'll quickly put on that disclaimer that we put on each week. Also notes that I'm not part of Self-Wealth SIFE. I'm a motion trader as my business. My details are at the top, licensing, etc. And beneath there, the Self-Wealth disclaimer, licensing, general commentary, all of that is in that description there.
Thanks, Jace. Now, before we get going with the markets, I have been thinking a lot of this lately because I've got something coming up, my own athletic endeavours on the weekend. And I've been meaning to ask you this for a while now, Jace. Now, I know you're a master's in your field, which is the steeplechase. Is that right?
Middle distance. I like a bit of middle distance. 800s, 1500s, throw the steeple in when we run and jump over things. That's a bit of fun. Cross country. Did the city to surf on Sunday. So, yeah, mix the distance up a bit. But
how did you go to the city for surf?
Did pretty well. Under an hour, which is a good time for city to surf for those who don't know. So it's 14 kilometres. Run around the streets of Sydney from the city, make your way to Bondi, weave and wind. And so it's a fun way to spend a Sunday. Well, some people probably think it's a mad way to spend a Sunday morning, but for us running folk, it's an enjoyable start to a Sunday.
Fantastic. Now, I think this is obviously it's perfect that I asked you this because you're quite an active person. The fact that you obviously are very athletic and you want to achieve certain things in your sport, right, must come with a plan. Am I right or am I wrong? Do you plan out your training or do you just do it willy-nilly?
Yeah, it's you're spot on, Rog. It's so process orientated. And it varies through the year. It's like it's like when you set up a trading plan. Like you work out, okay, what do I want to achieve? What are the goals I'm after? What sort of timeframes am I looking at trading? It's the same sort of thing when I approach running. It's like, am I trying to train for an 800 meters or a marathon? And that's going to impact the process. But either way, it's process orientated. It's not just wake up, put on the runners and head around the block a few times. It's like it's structured, and I think structured, prepared process is what gets us results in whatever it happens to be that we might be doing.
Yeah, and I wanted to just talk about this just slightly before we get onto the markets. And the reason being is because so many people think that, trading or investing is just doing it without a plan or like a simple plan. It doesn't have to be complex, right? Once again, it can be as simple as as simple as you like it, but as long as you have a plan and you follow a strategy that's maybe written. I heard once that a business plan should be as easy as enough to be able to fit on a tissue paper, right? So as long as you've got something written down and you're following that plan, that's the most important thing. Because I think being a trader or an investor is very much like being an athlete, right? You have to have, you have to be very specific in what you do every single training session, right? But at the same time, it's one of those things that regardless of the outcome or the result, obviously you're designing the plan to try and get the result once again. But regardless of the result, the end goal, you need to have a plan. And that's very similar to trading, right? As traders, we're kind of like athletes. We might be behind a computer, but the emotional stress, the physical stress, sometimes the emotional can translate into physical, right? Especially if we don't look after ourselves as well, health-wise. All right. So, what are your thoughts there, Jace?
Yeah, look, it doesn't have to be complicated, and it shouldn't be complicated. I think some of the best processes are completely uncomplicated, and it's really like, just ask yourself these 4 simple questions: when am I going to buy, or why am I going to buy? When or why will I sell? When do I hold? And how do I determine how much to invest each time I buy? If you can answer those four questions, well, you're pretty much off and running. And you've got to have a good process around those 4 questions. If you say I'm going to buy every time a stock falls 20%, well, it might not be a good process. But start by being able to answer those 4 things. It could be as simple: I buy when a stock hits a 3-month high, I sell when it hits a 2-month low, I hold in between, and I buy 20 evenly weighted stocks. There's a system. You've got to work through it and test it out, and that's not meant to be a ready to go, let's trade that particular system. But you get the general idea. It doesn't have to be complicated. Answer those questions, and then test it, apply it, do it consistently, stick with it through the market cycle. Expect you're going to have periods where it's not going to work so well. No strategy works through every part of the cycle, captures the up moves, the sideways, and the downward phases. And that's how we can do well over time.
Yeah, and this was prompted by a comment from a viewer last week. Actually, it doesn't matter whether you are a technical trader, or you're a fundamental trader, or you just want to invest in ETFs and track the indexes. Having a plan, even for that, like maybe that could be just investing at $500 once a month, or a weekly plan to invest that into the ETF that you choose, that you've selected, obviously. But that's a plan still. It's not just going in the markets willy-nilly, right? And one of the viewers mentioned a strategy last week around the dogs of the Dow strategy. You heard of that, Jason?
Yeah. Well, that's been a popular process. I heard about that years ago. It's like you're buying the underperformers in the Dow Jones each year, and you rebalance it each year. Just constantly buying the underperformers on the basis that every dog will have its day, and you get better performance the next year. It seems to have a history of working. It goes against the criteria which I use. So they're buying the underperformers. I tend to buy stocks which are already have momentum. But look, there's going to be lots of ways to approach the market, and many different ways it can work. I think the key is you don't approach the markets like a day at the races, where you just go out there and you just start, you're backing this and backing that, and I like that name, and it's not a process. That's just, it might be having a bit of fun. It's just some spare cash you can just spend on the day out. You don't want the markets to be that sort of way. You want it to be boring. You want it to be structured. You're not doing it for excitement. You're doing it because you want to grow your capital base over time. And we do that when we plan and prepare and implement.
Yeah. Exactly. Fantastic. And I think this is where once again, investing and trading gets its gambling name from, right? Just going out there and just picking random stocks. Of course, you're gambling if you've got no plan or no strategy, right? But if you've got a plan, you've got a strategy, you've got a business plan. You can look at it as a business plan, or you can look at it as a plan just like an athlete does. Look after yourself, obviously, physically, mentally, and then that will translate into your business plan and your trading strategy as well, right? Okay, fantastic. Thanks for your thoughts there, Jace. I just wanted to cap us, obviously start us off with that to try and pump us up a little bit. Let's start talking about the ASX 200, right? We've already got quite a few tickers to get through, so let's start talking at the ASX 200, please.
Okay, so we better get cracking into these markets. So let's start off. Let me get these charts up and on the screen. So we'll start off with the ASX 200. And well, it's been, Roger, it's been an impressive week since we caught up this time last week. So prices have broken higher out of this 3-week trading range that had been in place, and that momentum from the breakout has held in place through the week, and prices have generally continued to move higher. I think the fact that prices tried to break down about a week and a half ago, you can see this support, this horizontal support that comes in at around 8,630. On Friday, not last Friday, but the Friday before that, prices had a go at breaking down, didn't attract further selling. And I think that says a lot. And that's been the case for since over the 4 months since the low, in that each attempt to sell has been short-lived, and the buying's quickly come in and push prices higher. I think the message to take from this is that the sensitivity remains to the upside, and we're seeing that now with prices hitting a new all-time high today. As we've been discussing, this is very much a buy the dip environment. It's not a sell the rally situation as we've seen in past times. I suspect a lot of people probably sold out during the April collapse, the panic into that April sell-off, and many of those people are probably still waiting for a decent dip to get back in, but instead they've just been watching the market go up and up and up. I think another interesting thing is that the ASX 200 has had what seems like a fairly rare win over the S&P 500. So the ASX 300, from this recent low, ASX 200 is up about 3.3%, while the S&P 500 is only up about 2.8%. So it's not often we talk about the Aussie market being ahead, at least in recent times. Also interesting when we go over and we have a look at the equal weight. So let's go to the ASX 200 on an equal weight basis, and so this has been the most impressive part of the ASX big cap movement. It's not been so much in the ASX 200, but it's been in the equal weight. So the equal weight, it's also hit an all-time high through the week. Is an all-time high yesterday, and it's also had a strong rally off the recent low. But this rally off its recent low is even stronger than what we've seen in the ASX 200, and this follows after this pullback. You can see this shallow pullback that would had a couple of weeks earlier. And as we often talk about it, I like it when we get these. Just expand that. I like it when we get these shallow pullbacks, as shallow pullbacks are often a sign of interest in buying the dip, and these often lead to new highs, and that's certainly been the case in this instance. I think this is important because the strength we're seeing in the equal weight, it's telling us it's not just dominated by a few of the big stocks, either be a few big miners or a few big banks. When you get the equal weight pushing harder than the ASX 200, it's telling you that this is a broad-based rally. So it's not just a few stocks pushing the market or pulling the market upwards. It's a lot of stocks pushing the market higher. Just looking at this price structure we have here, both the 50 and the 100-day moving averages, they're the two averages I have in this chart. they're continuing to trend upwards. Prices above the moving averages. So, Rog, that's the definition of a bullish trend. And like we've been discussing in recent months, I think we should be positioned accordingly. Just quickly coming back to the ASX 200, and so I'm happy to stay long. I'm happy to stay long the ASX 200 index, happy to stay long individual stocks. That doesn't mean we can't get pullbacks or another consolidation. Like we've had various consolidations on the way up. They're always part of any market advance. As always, though, I'm using those wide trailing stops to try and see off the pullbacks when they occur, try and stay in the trend. But when we do eventually get at some point get a larger pullback, well, I've got those trailing stops to help try and manage risk. But now I think path of least resistance, as we've been saying for weeks and even months now, the path of least resistance remains up.
Yeah. Some could say this is actually boring, just seeing this go up, up and up and up, right? But this is the time where you've just got to make most of these winners, right? And then just be prepared if they start coming down, if it starts retracing more than what we expect. Okay, so similar situation over in the US.
Yeah, look, we want to make good use and enjoy the good times while they last, because it's not always a market which is going up steadily. Just go back a couple of years, and we had almost 12 months of this sideways difficult chop. It's the market goes through a cycle. There's an up phase, a down phase, and the sideways phase. At the moment, we're in the up phase. So let's make the most of it while that lasts. And when we go into another phase, well, then we jump to our strategies that help us manage through that. It's playing the cycle the whole way through. That's what we were talking about earlier with process. Going over to the US, S&P 500. So for the first time in several weeks, the S&P 500 has not hit a new all-time high during the week. Instead, we've had this pullback and consolidation below the previous peak from late July. At this stage, I'm viewing this as a temporary pause within an overall upward trend. Nothing here stands out as being a significant warning sign. From a structural perspective, the underlying conditions remain bullish. I think the key factors, or at least the key factors I'm focusing on, are these rising moving averages, the 50 and the 100-day. They're continuing to trend higher, prices above those moving averages, and we also have a clear sequence of rising lows and rising highs. So again, that's what an upward trend is all about. Roger, I think a mistake that a lot of people make is that they overestimate the odds of a pullback being a lasting high. And you look at all these interim highs we've had along the way. Each time people think, oh, that's it. Now the market's going to have this bigger pullback. And it's not just now. You go back to any time. You look at these pullbacks. A fair bit of concern often comes into people's minds that it's the start of something bigger. And I think that's a mistake, because when we consider the factors that we just discussed, so like rising moving averages, price above moving averages, rising lows, when we consider those factors, I think the odds favour in that sort of situation that it's that pullbacks are temporary and the trend's up, and the odds then favour new highs. I think there's certainly a scope for some more consolidation. Just looking at this pullback so far, look, this wouldn't be unusual to see this market come back and retest the 50-day moving average. That's like could be 3-4% pullback, but that would well and truly fit within the parameters of what we regularly see within rising trends. Look, don't forget the S&P 500 is up something like 33% in 4 months. So if we were to see some sideways consolidation or a pullback to the averages, that's, as I say, that's normal in a bull market. Prices rally, then they consolidate. It's the underlying trend that determines my positioning, and at this point, that underlying trend is very much upwards. Looking at the equal weight, S&P 500 on equal weight basis, Well, this hinted at the possibility of some consolidation last week. You might remember we discussed that it hadn't been as strong as the S&P 500 just over the last couple of weeks, and what we've seen it make a new recovery high, but wasn't an all-time high, and it's since come back to the 50-day moving average. But again, that's something we see in bullish trends. Like just having a look at all the times that the market comes back to the 50-day moving average in a rising trend. You can go back to earlier times, and again, you get these pullbacks to the 50-day moving average. That it's just how it all works. So we've got to pull back to the 50-day average here. Maybe we see it in the S&P 500 as well. I think the general progression here of rising lows and highs remains in place. So this remains a bullish trend. Just coming back to the S&P 500, I think that the play here is stay long stocks, stay long what's working, and what's working is rising prices, rather than worrying about will there be will this be an important or a lasting top. When the moving averages are rising, prices above the moving averages, I think our base case should be that a pullback is a consolidation before higher levels. That should be the base case. Doesn't mean it will work out like that, but I think you're playing the odds. When prices are above rising moving averages, the odds are of higher levels. Also, keep in mind, this is the seasonally weakest part of the year, around that August, September sort of period. So that could also play into like a longer pause, maybe a multi-week pause in the trend before potentially moving higher later in the year. But until I've got a good reason to do otherwise, I want to stay invested, try and see off those pullbacks with those wide trailing stops.
All right, fantastic. Let's have a look at the Hong Kong market then.
Okay, so going over to Hong Kong, and well, continue to consolidate just above the 50-day moving average. This remains a rising trend. Again, we've got that series of rising lows that remains in place. I think the odds are that this is a consolidation before another push to new highs, maybe in the next few weeks. And when we come over to China, and it's these haven't as yet had the lift off that I thought they might get. We had this break higher a few weeks back, but didn't get traction, didn't attract further buying, and prices then instead pulled back to the 50-day moving average. What's been encouraging though is that dip back to the 50-day moving average has been bought, and prices and just looking at today, they're having a little bit of a kick higher today, which is encouraging. I think if prices were to break below this recent low, that would be a problem, and then really throw this back into neutral territory, bring things back within this big range. Prices have been in for coming up to a year now, probably 10 months. But whilst that low holds, and with this strong rally today, a break above the recent high, maybe this can see some more momentum come into the market. So I still want to approach this with a bullish bias. It is important that this rebound we're seeing now does get traction and does start to make new highs.
Okay, fantastic. All right, let's before we jump on to the ticket, there's some general questions we might run through quickly here, and then we'll get on some tickets. All right, so the first one is from Robert. It's to do with the administration of his stocks. I've got 40 stocks. Jason, do you read ASX announcements for your stocks? If yes, every day. On the weekend, sold one of my stocks thinking it was 50% down, but it was a capital return.
Yeah, that may have been the stock called GNT. GNT is a stock code. It's a motion trader stock, and I've got this myself. And I looked in my self-wealth account last week or the week before. Maybe it's GTN. GTN, I think, might be the code. That's it there. I looked in my account. It was down 50%. Oh, there you go there. And I thought, well, what's going on here? And I went to the announcements. and had a look. Sometimes when you get a gap lower like this, it's either something really unfortunate has come out from management about missing a target or downgrades or something like that, or it could be something like a special dividend or a return of capital. So I've always got my fingers crossed. It's the latter, and in this case, it was GTN gave a capital return. It was something in the order of, I'm not sure what it was. Might have been 30 cents or something like that. A 30-cent capital return. So what happens then? The correct process in that situation is to adjust the share price for that capital return, because this isn't a real fall. It's no money lost. So you'd be make an adjustment. I can do that by clicking on this ADJ button on TradingView, and that will adjust for dividends. It'll put the dividends back in. So this is what the share price really looks like. There was no fall on the day. So I continue to have my position. I can't quite remember where I got in, but it's a motion trader stock. The initial motion trader signal probably would have been around. I'm actually not sure where it may have been. It could have been around February, potentially. I got in later. I can't remember. I'm not up much in this one, but nonetheless, it's still in my portfolio. The trailing stop's been adjusted for the adjusted share price history, which accounts for that capital return. But yeah, important particularly if there's been a big fall, I think it's a good idea to have a look at those announcements and just see, why was that fall? Was it something to do with capital returns or special dividends, or was it something bad from the company? If it's something's gone amiss with the company's fundamentals, well, then I'd be going to my trailing stop or my stop loss and selling it if need be. But I don't want to sell something unnecessarily, which could have been the case in this instance if I didn't look. Ordinarily, I don't spend a whole lot of time going through the announcements. It's only if there's something particularly significant in the share price movement that I might go and have a look. So yeah, it's not that often I'll go through the announcements. If the price action's positive, if rising moving averages, it's just stay on board, see where the trend takes me. And even if the share price is trending lower, I'll still, I still won't be poring over the announcements, wondering what's going wrong. It's just like, well, okay, there's no momentum here. I've got a stop loss. I know where I'm getting out if it continues coming back. That's all I need to know. Other people like to look at the fundamentals. Nothing wrong with doing that. Look, it takes more time to do that. If you want to invest that time, nothing wrong with doing that. From my perspective, I don't need to do a whole lot of reading because I'm using the price action and using calculations off the price action and then operating within those trading rules which I have, and that's what's driving my actions in the market.
Okay, great. So let's say this has happened now. Same sort of scenario. One, would you buy the new allocation? And two, would you adjust the exit stop to the new lower price or capital raising level?
I'm just assuming we're talking about GTN.
Well, let's just use that as an example, I think. Yeah.
It's not about with this. It's not like a rights issue or capital raising, which may have.
Capital return.
This is a capital return. The company's just sent money back. It actually turned up in my account today, so it's not a case.
Asking about capital raising.
And then it's a case by case situation. It's like some capital raisings. Like I'll look at where the capital raising price is and compare it to the current share price. If they're trying to raise capital and it's and the share price is below what the raising price is, well, I probably won't participate. Well, because I could buy the shares cheaper on the market if I wanted to buy more. But sometimes you get a situation where you can buy the shares at a discount to the current market price. In that case, I'll probably want to buy as much as I can, provided that discount remains a discount in the days leading up to the offer closing. So it's a case by case situation. It's not a one answer for every situation.
Of course. All right. So this next question is from Roger. Do you see any evidence for a commodity super cycle starting? If so, is there any ETFs that you would look at or recommend?
Yeah, absolutely. I think there's calls for, like, people have been talking about a commodity super cycle for years, and these things can and do happen. Ways to play it. Well, a stock like BHP's, I think, a great way to play it, because BHP has exposure across a number of different commodities. How else could it play it? There's some US listed ETFs which are focused on commodities. I'm just thinking where I've got them, my long list of things. This one here I like, USCI, United States Commodity Index Fund. So they use futures to invest to get exposure across a whole range of commodities. And this has been in a nice upward trend for some time. But it's not just resources; also includes agricultural commodities as well. But look, I think that's an interesting one. Go to the website, the United States Commodity Index Fund website, and actually just read about how they determine the portfolio. It's a really interesting stock. Locally, there is MV. It's a Van Eck Resource ETF, MVR. So this will just, like, BHP is probably going to be the largest exposure, but have a look. This is one way to invest in, like, a portfolio of resource stocks rather than just trying to pick your own. And it's resources of stocks generally have struggled over the last few years. Like, you just look at BHP and Rio's or Fortescue's share price. Maybe that's turning now. I've discussed BHP and Rio. I've talked about them in my Friday strategy session a bit recently, and they could be getting interesting now. So this could be one way to play the resource cycle. I think there's merit in looking for a resource super cycle. But look, that's going to be a longer term thing. That would play out over years. Generally speaking, looking at some of the resource plays over the last few months, I think there's some interesting things going on with resources generally.
Yeah, lithium is another one that's coming out of the woodworks. All of a sudden, everyone's talking about it, right? So we'll get onto that very soon. One more question here from Terry. Based on the momentum, the trend is going up, but fundamentals from Goldman Sachs are warning that only retail investors are buying, whereas institutions are selling. Should we exercise caution? Your view, please. They're also saying there could be a huge correction. I think they're really trying to instill the fear in everyone, right? So, yeah.
Look, I don't know what to make of that. Like, the institutions are the ones who run all the ETFs, and the ETFs aren't selling. The ETFs are buying because the market's going up. And even fund managers who do their own thing and don't go on index tracking, they still don't want performance which is too far different from the index, generally speaking. So it's hard to imagine too many funds are sitting short the market or sitting neutral the market when the market's performing strongly. It's just not how it works. But look, that's what it says in the research note. I'm sure you could find a research note which would suggest something else as well. It's the market's not easy, and, like, just to show how the looking, when was it? I think it must have been 2024. So the experts, the industry experts on Wall Street, they put out their forecast for what was going to happen in 2024. So this would have been in late 23, and I'm pretty sure I've got the correct year. And the top forecast was for something around something Goldman's, all those guys are all in there. Top forecast was something around maybe around 4,800, and then there are a number which were bearish, expecting the market to fall. So just take with a grain of salt this industry experts think, and Wall Street analyst says. It's like they can see the future as well as me, i.e. they can't. So they've got an opinion, and they'll back their opinion. Their ego will get tied up in their opinion, and they'll beat the drum for that opinion for much of the year ahead, probably. And they may be right, they may be wrong. In this case of 2000, in this case from a year or so ago, they're all wrong to the extent of how far the market rallied. Markets will do what markets will do. Whether you think they're overvalued or not, momentum can take stocks a long way. And so my perspective at the moment is the trend's up. So yes, we can look at, there are lots of measures of fundamentals that we can look at which will say the market's overvalued, as I'm sure we could have looked at throughout this whole bullish phase over the last couple of years. You can spend a long time out of the market waiting for an overvalued situation to come back. It's like in times gone by, if we look at like a weekly chart, like going back to you can go back to times like through the 70s where PE ratios fell below 10, and you could line that up with historic PE contractions from earlier times where the market would come back towards 10 or so. But if you've been waiting for that sort of contraction over the last 30 years, you've basically been out of the market, because big PE contractions of yesteryear haven't happened, because things change, interest rates are at different levels. Whatever happens, things do things differently. So I think just got to be careful with hinging off an expert opinion on where things are. Sure, take it on board. Maybe don't be manage risk. I think it's just comes back to managing risk sensibly, not putting yourself in an extreme position. Whereas if you're wrong, you get hit especially hard. So manage risk with good sense.
Yeah, it comes down to your plan and how you're going to manage if it ever does really fall like it did just at the start of this year, right? So, all right.
And it usually doesn't fall in one day. Yeah, it's unlikely the next bar on this chart is going to be such. It could happen, but it probably won't. If this is going to become a bearish market, it's often a process. Prices will fall. You might have a rocky September, October, and then we'll get, maybe it's a case of prices start consolidating below the moving average. The dip isn't bought. There's another leg down, and you can and start to get this little bit here, and starts to develop. The moving averages start to roll over, and the structure changes, and then we take a more defensive position. But we don't have that at the moment. We have all-time highs and rising moving averages. So, I don't think we should get too swept up. And this is what I was talking about earlier on. I was saying that all-time highs are typically met with concern about, is this it? Is this the one? And whereas most of the time, look at these all-time highs. They're a precursor to more all-time highs, not a predictor of a coming collapse. So, at some point, an all-time high will be it, but probability tends to favour that an all-time high will lead to another all-time high until the situation and the structure changes.
Okay, fantastic. All right, let's some good questions in there, very in depth. So, but let's get on to some tickers now, Jace, and we'll start off with Maurice's PTM, please.
Yeah, so this recovery continues to firm up. So we're above the moving averages. Moving averages are now crossing. We talked about this last week, and I said it was a little bit too early for me. It probably still is a little early for me. Next step for me is I want to see hold on to these recent gains. So if we could get some sideways price action while these moving averages catch up, and it can just consolidate the recent gains, well, then I think maybe we start getting a platform for higher levels in place. Just a little bit cautious at the moment, because we have seen these bursts of excitement in the past which haven't held. It's been a takeover target in recent times as well. There was interest in acquiring, and then it fell over. I think maybe that might have been why the shares fell. But at the moment, yeah, there's potential of a turnaround setting up. It's if someone wanted to get in early, by all means, we can still manage risk around that. But for me, I'd probably just, as I said, like to see it hold on to these gains and consolidate, and then maybe if we see that could be our platform for buying.
Okay, fantastic. ALK.
So I've got some of this one, and well, it's had a down day today, but and I don't know why that is. Was there? As I said, if I was particularly concerned about that, I'd check the announcements and see whether there's a what the reason is. But I'm not particularly concerned about it. It's all just part of the price action for me. It's I'm in from not that long ago. It's not a highly profitable position. You're somewhere probably in the around maybe the late April period. Maybe I got a stake in this one. It's a motion trader stock. It's been a motion trader stock for longer, probably maybe since around January. Trend is up. It was a new recovery high yesterday, and the sequence of rising lows is in place. I'm happy to hold this one and see where it goes. Looking at today's price action, open, traded lower, and now it's back up near its high. So I think that's a positive sign. It's a sign of buyers coming in to pick up what some people were scurrying out of this morning. Others have stepped up and started to pick those shares up. But that fall probably does mean there is some consolidation coming. But I think this overall trend remains in place. I'm happy to stay long this stock.
Okay, fantastic. The next one is TTT from David, please.
Yeah, we've looked at this for a few weeks, and we're starting to get this series of lower lows. So what's if I was holding this, I just want to make sure I knew where I was going to say enough's enough, and this could still trade a bit. Depends how I was playing this. If I was in from much lower levels and I had a wide trailing stop, my stop could be somewhere in the vicinity of it could be below. It could be around 20 cents or thereabouts. So it's got quite a bit more leeway. If I'm in down here at good levels and I've had a wide trailing stop, I've seen off some pullbacks and the stop is slowly making its way higher. It's I'd be saying, look, I'm happy to stay there. I know where my wide trailing stop is. I'll let it play out. If I'd bought more recently, as shares were breaking higher in May, for instance, and I put a wide initial stop on, I might now be looking at the structure saying, I don't like this these lower lows which are forming. I bought it on the basis of shares breaking higher, but it's lost that momentum and it's starting to lose a bit of altitude. In that case, I might be more inclined to say, if it makes another low, I might just say, look, I'll just close this one, take a small loss, and just move on to something else. I've got no money. I've made no money from this stock, so I'm just going to leave the stage with a small loss. And if it stabilizes and comes back, I'll come and have a look at it later on. But otherwise, I'll just move it on. So I've got a different play here depending what my situation is. New position, I'm looking to protect capital. Long position, well, I've got plenty of money built up in it. I'm happy to give it that wide trailing stop and see whether it stabilizes. But from a near-term perspective, I don't like the lower lows and the lower highs. It does open up vulnerability and probably increase the prospect for some more near-term weakness. Certainly not a dip I want to buy at this point.
Okay. Shailendra, good morning. Let's have a look at CU6, whether to hold or sell.
Well, this would be a hold for me because it's had a big initial run from below the averages to above. The averages have crossed, and now we're getting a pullback to the moving averages. So if I'd gone in early, even if I got in late, like how far has that been? No, look, if we were talking about this in the last couple of weeks, I would have said that it's had a big run above the moving averages. It probably needs to. We probably need to see what the next consolidation looks like. So for me, it would have been a buy up at these higher levels. Now we've got pullback. It's a case of it needs to stabilise. Can it stabilise above the moving averages, build that platform from which higher levels could be achievable? It's important now. So it's been a big rally from the June low. It's now got to hold on to much of that rally. If it were to keep coming back at the rate it's been coming back, it's the bullish potential from the structure quickly dissipates. At the moment, if I bought this sideways pattern or breakout, if I got in nice and early, I'm happy to risk that remaining open profit, have a stop loss back down here, maybe around 270 thereabouts. And if it can hold above that, let's see if it stabilizes and then gets that platform for higher levels. But if it keeps coming back, well, then I'd close it out. I wouldn't buy it now. I'd rather see how this consolidation plays out. I want to see it get a foothold and get a foothold around the 50-day moving average, stabilize, and then we can take it from there. But I think it's bullish potential is still alive.
Okay, fantastic. This one's from Maurice, another Maurice. Let's have a look at X20, please. EX20.
EX20?
Yeah.
Okay, so it's a better shares ASX 200 ETF. It looks like.
Yeah.
So it's it's very much like what we spoke about with the ASX 200 earlier. Got the trading range, got the recent breakout. I'm happy to stay long the ASX 200. If I had this one, I'd be holding it. It's even the case to say, well, look, it's just broken out from this this trading range. It's potentially a buy at current levels. Everything we said earlier on the ASX is very much in play, and this just looks like the ASX 200. A little bit different because it's an ETF, but more or less that's the ASX 200.
Yeah. All right. Let's look at IGP for him, please. IJP. Sorry, IJP.
So this is a Japan ETF. And nice break higher as well. And we're seeing strength in the Japanese market. So, of course, the ETF's breaking higher. Look, this remains an uptrend. It remains if I had this one, I'd be continuing to hold it. Like an index ETF like this could be like a medium to longer term hold as well. Not the sort of thing where you may not be running a trailing stop, but just overall monitoring the structure. Look, this is an established uptrend. Like we just go over and look at the Nikkei. You can see the breakout there. It's up today. It's at new highs today. It's been this big sideways pattern for over a year now, and now we're getting that upward momentum. I'd be very happy staying with this. Could even consider buying it. I think at current levels because we do seem to have that momentum coming out of a trading range. So IJP, for me, that'd be a nice one to hold or potentially buy.
Next one's from Lloyd, CAF.
Nice pullback to the moving averages. This is a an ongoing upward trend, still relatively early stages, it looks like. So you can see we had had a consolidation and a breakout. We've had a bit of a run, and now we're just having a pullback to the moving averages. If I had this, I'd very much be continuing to hold it. And if I wanted to get some, this could be a point to buy it. It's I like the strong rally, and I like the shallow pullback, and I like the rally we're seeing at the moment off the 50-day moving average. Maybe there's more consolidation to come, or it could just continue to move upwards. But yeah, that's a nice one. Yeah, happily have that in my portfolio.
Okay, SUL.
Yeah, signs of an emerging trend. You can see how prices flip from below the averages to above the consolidation, and then the rally. Further buying has come in. The averages have crossed, rising lows, rising highs. All those building blocks we look for are in place there. I'd be happy holding this one, and I think I could also consider buying it at this little pullback, or I could wait a few days and just see whether maybe it continues sideways for a little bit longer as these moving averages catch up. But yeah, there's certainly more, I think, more upward potential in this stock. I'd be happy to see where it goes.
All right, next
And
one's
if I were to buy some here, I can manage risk conservatively. I think with probably like a 9% initial stop. You could just use that low there from 25 July. So it's I think it's a relative low risk entry into a stock which does have the potential to trade to new highs.
okay, the next one's from Devender. It's OCL.
Yeah, nice trend in play here. That strong rally off the April low, consolidation into the moving averages. You can see it got pulled away from the averages, so that's often where gravity pulls things back, and it has. It's kind of like you can see see a bit of a zigzag type pullback to the averages. And we often see pullbacks like this where you get an initial move and then you get a rally, but then you get a secondary test of the lows. And now from there, again, it's coincided with the moving average, the 50-day moving average, and from there we've had another rally. It looks like the momentum's to the upside. I'd be happy holding this one in the portfolio, and I could consider buying this at current levels with a stop. Say, yeah, I could give this one like 12, 13% thereabouts. You're just back below those lows from June, July. But yeah, trend in place.
Okay, fantastic. The next one is KOV.
I've got some of this one, this obscure stock, and I'd never heard of this one. This turned up in my scans like, I don't know, 3 years ago or something. And I think it's to do with engineering, I believe. As you know, I don't spend a whole lot of time going through the fundamentals. So it must have been, I can't remember exactly when, but it's been my portfolio for ages. So somewhere back way down here, maybe 2020 or 2021, thereabouts. Bought a stake in this obscure stock. Don't know quite where I got in, but it would have looked something like that. I wasn't buying it at the lows. I bought something which had been rallying for a bit, and it's just it continued to rally. This is an interesting period through here in 2022 into 23, where I went sideways for over a year. And some people get bored and say, it's not doing anything, I'm going to sell it. But the stock it's been paying dividends the whole way through. So sat there, wide trailing stop wasn't challenged at all. So it just sat quietly in the portfolio. Then it got another gradual increase, and that's turned into a stronger rally in recent times. But yeah, more consolidations, plenty of consolidations along the way. So be patient with your good stocks. Let your good stocks be all they can be by just patiently sitting with the consolidations, unless the consolidation turns into something bigger, which triggers a trailing stop. Then for me, it's time to leave. But yeah, nothing wrong with sitting through consolidations, collecting dividends, staying with trends. For me, this remains a hold. I've got no plans to do any selling at this point, and moving averages are up. I'd struggle to be adding to the position now because it is stretched from the moving averages, and when it gets stretched, they often pull back. Like you can see where prices were stretched in August, got ahead of themselves, and they pulled back and consolidated. So I want to try and avoid buying after it looks like a big move is in place. But I certainly don't want to try and take profits, try and be clever and say, look, I'm going to take profits and I'll buy it back, because that often ends poorly, and you trigger a tax event as well. So I'd rather try and stay on board the bigger trend, which at this point remains up.
Okay, the next one is, okay, one more there. So DTR, please.
Yeah, this is an interesting one, it's like being a low price stock, which has run hard. What's encouraging is that it hasn't quickly then given back all the gains. It has gotten a bit overcooked in the near term, and it has come back to the moving averages, which is a fairly normal thing to do. But then it's got another foothold and it's consolidated, and we've got a new platform, and it's rallied off that. If I was on this one, I'd be happy to stay on. I'd be running a wide trailing stop strategy, which would be below the 100-day moving average, giving it lots of room to move. And you can see why you need to give these lots of room to move, because this is going to be a big percentage pullback. That's 60%. So it can be a pretty wild ride. We've discussed in previous episodes where, particularly in these low price stocks, if you get a quick 500% gain, it can be worth considering taking, skimming the top off it, taking a 10% or a third or a quarter, whatever it may be that works for you, off the table, because some of them come all the way back quickly. So you can just de-risk it a little bit. But yeah, in terms of like what to do now, I'd be staying in wide trailing stop below the 100-day. Look, I don't know that I'd buy any just here. I'd probably continue to watch this. So we'll go ahead that rally off the averages, see whether we get a bit more consolidation, and then if there's a break up from there, well, maybe there's an entry point. I don't think there's a rush to buy at the moment. I think it's more of a hold situation.
Okay, fantastic. The next one's from Shirley, KAR.
KAR?
Yep.
Yeah. This is trading nicely. I know it's a motion trader stock. We got a signal for this around early June, I think it was, and so we've had that nice initial run, got a bit away from itself. Now it's come back to the moving averages, and it looks like it's one of those relatively shallow dips, which is finding support at the 50 days. So that's a sign to me that there could be some good buying support coming in, buying of the dip. I'd be happy holding this one. Had I bought it a bit earlier, happy holding it. The tricky part with this is oil price is still messy. And does this require a stronger oil price to see ongoing gains? I don't know, but the oil price isn't contributing to the trend in this at the moment. Nonetheless, I guess it could be considered as a buy at current levels. Stop back down. Could be back down $1.65 or something. So it's going to be, I think, contain risk quite well, and see whether this trend can get going some more. But yeah, it's certainly got the potential to continue upwards. I like the structure. The structure is bullish. Let's see whether it can deliver on that bullish potential.
All right. Next one is SIG.
IG?
SIG, yeah.
Yeah, we've looked at this a bit, and the structure has flipped to below the moving averages, and the moving averages, they haven't crossed to the downside yet, but they're getting close. So this is a position of vulnerability. But having said that, and we make this point a bit, it's important to note that just because a stock flips to the wrong side of the averages, it doesn't mean that it's going to continue to fall. often during these during big consolidations, a stock it'll oscillate either side of the averages. The key now is like holding. It's when they consolidate below the averages and then have a secondary break to the downside. That's when the structure really starts to weaken. At this stage, I'd be keeping an eye on these previous lows, which are above where prices currently are. So I'd be giving, if I was in this one, I'd be giving it the benefit of the doubt, particularly if I was in it from lower levels. If I'd bought this breakout in June, so you can see prices, or even May, if I'd bought one of these two pushes above previous highs, I'd call those like mini breakouts. If I bought one of those, I'd probably be out of the stock by now. I'd say, look, I bought on the basis of momentum. I've given it some initial room. The 50-day moving average maybe a bit below, or maybe even back to the 100-day, but it hasn't. It hasn't got that follow-through buying. It's come back. It's looking weak. I'll probably close it out. So again, it's a different strategy depending on my entry point. In at good levels, lots of room. See if we can see off this consolidation. In late, it's not working out. Let's just go away and come back. If it starts to look good again, then I'll come back and have a look. That said, if someone's in late and they've seen off that fall and they've got the rebound, I'd probably give it. You can at least give it to the July low. Say, look, it's really not working at the moment. But for now, consolidation continues.
Okay. Next one's from Irfan. Good afternoon. It's LKY, please.
Yeah, boom. It's that's a trend. This is one I'd be staying with. Depending on where I got in, if I'm in down here at 3 cents, I'm probably thinking, do I want to skim a bit off the top, as we just spoke about? Otherwise, I'm not buying it because it's so far above its moving average. But if I'm in at these lower levels, I'm holding and seeing where this goes. Notwithstanding, possibly maybe skimming a bit off the top, de-risk. I'd probably want my trailing stop. Like, this is the thing with these; they require big trailing stops. Like we saw that one earlier that came back 60% and then rallied to new highs. It's like, look at this one from current levels. Same thing. This could fall 50% from current levels and stabilize and move higher again. So I think it needs plenty of room to move. It needs that wide trailing stop of probably at least back to the 50-day moving average at this point. And if someone wants to set a 20% stop or a 25% stop, it just doesn't buy them much. It's like that could easily get whipped out in a day's volatility. So yeah, it's and this can be unsettling for a lot of people, the wide stops, because you risk giving back so much. But this is why you can take a skim bit off the top. So you lock in a bit at higher levels to keep a good balance to see whether it can turn into something much larger. So for me, this would be a hold, wide trailing stop. But yeah, I don't want to buy it when it's so stretched, because even if it stays bullish over the months ahead, the potential for a large pullback, it's very much there. And that would be too big than the stop I'd be prepared to put on it if buying at current levels.
Okay, fantastic. Thanks. NIC, please.
So yeah, it's starting to want to turn higher. It's like the nickel price isn't helping at the moment. The nickel price is one of those commodities which hasn't flipped to the right side of the moving averages. So I think that's probably a handbrake for this stock. But it is above the moving averages. The averages have crossed. I think this is a motion traded stock. It may well have traded, or may not have. Let me just see. Yeah, so this would be a motion trader stock, probably triggered a signal a few weeks ago. So if I'd bought that initial break, I'd still be in. So my initial stop would comfortably be able to see off this pullback we've had so far. I think the key now is can it stabilise around the moving averages, build that platform, and then start to rally off it. So if I was in, I'm happy to stay in. Give it a bit more leeway. Trailing of the initial stop loss is still below the 100-day moving average. It's still got headroom to move down. If we can see some sideways consolidation, then a break higher again, well then I could consider an entry point if I wasn't already in. So it's just one to watch at the moment and be patient with and just see how this price action develops. Just like I just quickly jumped to the nickel price, and you can see we've still got these declining moving averages. Hasn't been able to flip above and start to get established above the moving averages. So that's not helping nickel industries at the moment. It's nice when everything lines up, when the metal lines up, the stock lines up, but this part's not lining up at the moment. Nickel remains in a downtrend.
Okay. Rob wants us to look at PLY, please.
Downtrend still in place. It does look like it's trying to step higher. It's too early for me. I need the moving averages to cross. It needs to have another push to the upside, and then probably some consolidation. So it's a little way off for me or for motion trader. And someone will say, look, I don't want to wait for it to get up to 32 cents and consolidate, because that's I'll be buying more than 50% above where it is now. And that is true. And this is the thing: when you wait for more confirmation, you tend to pay more. But by waiting, you also tend to avoid more stocks that get those building blocks in place, but then fail to capitalize on them. So can't at all rule out the possibility that we get this initial structure, which then just gives way to lower levels. So by waiting, maybe you can avoid that. So for me, I'd wait. If somebody wants to have a crack at this now, or they're already in, probably I'd be keeping an eye on this low from June, which may not be that far away. It's about 28%. Break of the June low. Well, then you can say, well, look, this we certainly don't have an uptrend. At best, we've got an ongoing basing phase. At worst, we've got a continuation of the downtrend. So yeah, I'd be just standing aside, just maybe watching for now.
Okay, next one is DF.
Yeah, it's still got this big consolidation. Like I drew this in ages ago. Would look like, but it still applies. It's a resistance point. It's still trading below this resistance. The moving averages are trending higher, so there is this upward tendency to the share price. It's had a few attempts to break to new levels, but it hasn't been able to get away. Hasn't really been able to generate that escape velocity from this ranging phase. If I was in it, I'd be happy to stay in there for now, because we do have that upward tendency. Below the July low, it starts to weaken the structure. If I was thinking of buying some, I'd probably be looking at the high, from August. If we get some more sideways price action, like we've seen in the past, and sideways, and then we get another break, maybe I'd buy that break and see whether it then starts to really get some upward momentum. But for now, if I'm not in it, I don't think I need to rush into it this week. I'd rather buy a break out. But no problem with hanging on to it either. It's certainly not in a downtrend. It's really just this ongoing sideways phase.
All right, and next one's from James. MAU, please.
Well, I know this is a gold-orientated stock. It's the general trend remains to the upside. So it's recently had a high point, and it's pulled back, it's stabilised, it's on the moving averages. So yeah, the overall trend's up. If I'm in from those lower levels, I'm happy to stay there and just work with my stop loss. And yeah, so just thinking like had I bought some in March, for instance, yeah, my stop loss is probably still around $1.25 or so, maybe. So I'd be happy just to leave that there and see whether it continues to build a base around current levels, and maybe from there use that as a springboard for another push higher. I wouldn't buy it at this point because we don't have momentum to it. But it's not one I'd feel I needed to sell either. If I was in from lower levels, it's just a wait and see how this price action develops. It's certainly got potential there still. Yeah, but probably not a hurry to do too much.
Okay, fantastic. The next one's going to be from Jagjit. CHN, please.
So I've got a few of these myself. I bought them a little bit higher, so it's sort of like much below these lows from August, and I'll just close this one out and just say, look, it hasn't worked for now. Like, is this a big basing period? Like, we're seeing lithium stocks generally start to have a bit of a run, some more than others. This has had it's flipped from below the averages to above. So we could say that this is the initial run, and now we've got the pullback to the averages, and we get a bit of a sideways consolidation before potentially another push higher. It's certainly got potential to it, and we could then say, look, this is a big basing phase, and if it can hold on to most of these recent gains, we could get a situation where we get some more consolidation, and then we start to get a rally and then a breakout out of this big sideways range, which would really send this into a strong upward trend. So the potential's there, but the question is, will that potential be delivered? And of course, we don't know that. So I'm happy to give this a bit more runway for now. If it comes back and triggers my stop, well, then I'll get out and I'll look at it later on if the right sort of price action then develops. I wouldn't be in a hurry to buy it now. If I wasn't in it, see what price action we get, and then maybe buy the rally off a base it forms. But if it just continues to ebb away, and we get another situation like we had in September 24, we get the strong rally, but it doesn't hold on to its gains and makes its way back down to the bottom of the range. So I've got no intention of riding this back down to the bottom of the range. Hence, I say, look, if it breaks these recent lows, I'll probably look to wrap this one up. But if it can get a foothold here and then break higher again, well then, could be something good in the making. So it's one to continue, watching, potentially holding, and getting ready to buy.
All right, SLX.
Yeah, it's not there for me at the moment. It's back above, or it was above the moving averages. Now it's just stuck below the averages crossed, but it hasn't really got the momentum there at the moment. It's still, I think it's still a bit of a mess. What it needs to do for me, it needs to like hold around current levels and then start to just get some sideways together with the let these moving averages come across, and then from there, maybe we could see the break higher. But it needs a bit more structure there. It's not there at the moment. I don't see an imminent move to the upside. Of course, I could be wrong, but this sort of price action usually doesn't lend it to like a swift upside move. More, it's like it's either got to consolidate or starts to just ebb away and give back those gains from the April, May low. For now, it's just it's just a watch. I wouldn't be here just at the moment.
Okay, fantastic. We'll move on to Lily's. Do you have any? She wants to discuss the lithium bounce just quickly. Any good stocks in there with lithium, Jace, that you caught wind of?
Not particularly. Liontown, I've got a stake in these at around. I probably got in at around current levels, so it got close to my stop loss. We talked about this last week. That blue line, I drew the blue line and said, "Look, if it breaks much below there, I'm out." So it got close, but then had a strong rally. There's meant to be like these large short positions in a lot of these lithium plays. So is this the start of a new uptrend, or is it a short covering rally? I don't know which it is, or is it a combination? Is it a start of a new uptrend, which leads to the shorts just having to wrap everything up and fuels a new uptrend? We just don't know. So I think this is a possibility. I had some CXO, and unfortunately for me, I closed them out near the lows. So I bought the breakout. The breakout didn't get momentum, and then I closed it for a small loss. That's the thing. Sometimes they rally again. So this isn't. It's a possibility. I'm not being drawn back into it just yet, though. We've talked about Chalice. The other one is the PLS, Pilbara, which has had a good run. It's probably been the strongest of those stocks. So you got the rally above the averages. Started to get the sideways consolidation. Had we got that one more leg down, it would have been all, the setup would have been there, but it's just gone quickly. So sometimes you just don't get the perfect setup. Looking at these US listed ETFs, they've done stronger than the local plays. So Remax has probably had the strongest one. It's a Van Eck Rare Earth Strategic Metals ETF, which is I believe it's mostly lithium. So there are lithium plays outside the ASX which are running stronger, as you can see by the performance of that ETF. So I think that's an ETF which is worth keeping an eye on if you're trading in the US and you want a lithium-based ETF rather than trying to pick which stock is going to be the one that runs. So it's it's a sector with things going on, and it's worth keeping an eye on. I don't see a standout play here and now today, but if you're already on a few of these stocks, it may be worth continuing to let anything which is running run.
All right, fantastic. Davina wants to know, which broker do you use, Jason?
Well, I use Rod Jenny's team over at Safe Self Wealth. It's I think look, Rog can talk about his service, but for me, just tell you what I liked about Self Wealth and why I came across. I was with a big bank, big bank broker, and I spoke to them about brokerage. I said, look, you're charging me, it's basically $20 a trade, and if I trade like a larger volume, if I wanted to do like big volume in an ETF or something, it could be a couple of $100 to do that. I said, I'm putting through a lot of trades. It's like I've got like a 40 to 80 stock portfolio. There's lots of volume going through. Can we make an arrangement on the brokerage? Can you give me something here? Because I know there are other brokers who are doing lower rates, but I'd like to stay here. All my business is here. And they went away and they came back and said, we can give you a 1 cent discount. And you heard that correctly. It was 1 cent. So rather than $19.95, they'll charge me $19.94. And it's like, okay, time to pull stumps. I think we've got to take the show somewhere else. And Self Wealth had a great offering, $9.95, regardless of volume. So that works really well for me when I want to move into I've got many relatively small trades with my motion trader portfolio. But then I might want to do a larger ETF transaction. So the $9.95 is just great result. I like the ANZ account that comes with it. That I feel safe with that. I like the individual HIN. That was another big thing I wanted, because I know some of the other low cost brokers don't give you an individual HIN, and most of the time that's fine. But when things go haywire in the market. Sometimes I just like that the safety I feel I get with the individual hen. So that's my story. Why I'm here.
Yeah, and I got to get a show out of this as well. Our self-wealth viewers got to get a show with you over the last almost 2 years now, Jace. So it's been a great relationship. It's actually $9.50 as well, so not $9.95, $9.50, fixed regardless of the cost. So
Even better.
you can always try it out for free with a link down below, and you get 10 free trades there, Davina. So feel free to send me an email to the support and say hello as well to me if you want to try it out. All right, so let's get on to the final leg here of our tickers. GBT from Silver. Thanks. Sorry, GPT. Sorry, GPT.
Oh, PT.
Yeah, I'm getting confused with Chat GBT or something.
So with the Crappie Trust. Yeah, it's slowly starting to make its way high. It hasn't done much for a while, has it? It's since the COVID crash, and like GPT, they've got a lot of office exposure. Office, they've got other things other than office. They've got some retail and some industrial, but office is a big part of it. Like some of those big towers in Sydney, I used to work in GPT buildings, and it's. There is upward momentum there. The moving averages are higher and the price is above it. We have seen that before and hasn't really gone on with it. But we've got the generally rising lows. So I think I'd have an upward bias to this stock. It's paying a dividend as well. If I was holding it as part of the portfolio, I could give this the benefit of the doubt now and see whether it continues to push higher. If I like it for whatever reason, I could consider buying it here at these levels. It doesn't appear stretched. It does have momentum to it, and see whether this is the momentum which does continue higher. As I say, these momentum pushes of in recent years haven't gone on with it, but that's not to say that this one won't. It's I think it's worthy of consideration. It doesn't look to me as a standout, but it's certainly I don't see any reason why. Don't see any great issues with it, other than it's just it's currently not in a strong trend.
Okay, next one's on the New York Stock Exchange from James. It's TFPN.
TFPN. This is interesting. I never thought this stock would come up on this show because it is obscure, and you've got to be of a certain type of person to be looking at the podcasts and stuff where you'd find it. So it's a trend following ETF. It's put together by a guy called Jerry Parker, and he's one of the pioneers of the algorithmic rules-based trend following. He was actually one of the original turtles. So if you remember the turtles, which was a group of famed traders from the late 1980s. Richard Dennis was the guy behind that. So Jerry's put this together. Hasn't got the runs on the board at the moment, but so what it's doing, it's looking at it'll trade currencies and commodities and bonds, trades individual stocks. Might do the index as well. Not sure. But look, in theory, this should have its time. When there's strong trends in its underlying markets, it should be able to capitalise on it. And Jerry's been great at doing that over the years. At the moment, look, I've been watching it for a while just to see how it would go. In days gone by, to get exposure to some of these, they're typically called hedge funds. Is the way most people would look at it. They were hard. They're inaccessible for a lot of people. You'd have to have might be a minimum of 100,000 or 500,000 or $1 million or whatever it may be, depending on the fund. You fill out application forms. Some of them would screen you to see whether you're appropriate, and it was quite hard for most people to get in. And now this is like EFT based, and it's that same sort of high end. not so much high end, but so much more of that inaccessible type platform for many people is now available through an ETF. But at the moment, we don't have the momentum with it. I'd be inclined just to watch it for now if I was interested in it, and I am. I do periodically look at it, but we don't have a trend in the trend following fund, and that'll be because the underlying markets it's trading aren't in line with its process. But I'm sure that will change over time. So an interesting one to be aware of. So well done coming up with this one and being aware of it.
Okay, fantastic. The next one is from Soxy. That's URW. Delisting from the ASX. Should we sell? Got an email from Super. Confused. It's delisting.
Look, the trend's up. So this is if something's delisting from the ASX, I tend to want to just wrap it up. It just becomes too complicated, unless I've got an account where I can trade whatever exchange it's going to be then domiciled on. Like on this chart on its own merits, there's an upward trend in place. So ordinarily, I'd be saying, look, I want to stay with this and see where it goes. But personally, I'd prefer to avoid the hassle of the delisting and trying to trade something which is like, and often we may do that. We may have a US listed stock. It just depends where it's going to be domiciled. Can you trade that market easily? I don't know the details to it. If it can be easily traded in another market, well, great. But if it's in a market where you can't easily sell the shares, well, I'd probably sell them while I can easily sell the shares. But that's just me. Everyone will do what's best for them. At the moment, uptrends in place.
Yep, obviously, do your own research there, Soxy, around what you need to do.
Just looking at this, it looks like it trades on Euronext. So it's probably going to be a European-based listing at a guess. I don't know. I haven't looked at any of this. So if you can trade where it's going to be listed, great. If you can't, well, then it's worth, as our viewers doing, considering is it worth hanging on to.
All right. DTL from Alessandra. We've got 6 more to go, Jace.
Okay. DTL doesn't have a trend at the moment. They're just trading sideways in this range along the moving averages. So it's really neither bullish nor bearish. Looked like it might have been trying to get a bit of momentum going a few times, but hasn't really been able to push on from it. If I wasn't in this one, I'd just probably stay on the sidelines. If I was, well, I could hang in there for a bit longer, but I'd probably be looking at having an exit, maybe in the $6, somewhere between $6.50 and $7, and saying, look, I've been patient and given it room to get going, but it's now come back, and I'd probably then close it out. But if it can break above these recent highs from July and May, well, maybe you can get some momentum going. So it really, we've just got to wait and see. It hasn't been able to kick through with these early signs of momentum, but if it can hold current levels and have another case, maybe that'll be the time it'll get through. So if in there, nothing wrong with holding for now with that stop loss. If not in there and looking at it, probably keep watching, and maybe for me, I'd wait for a breakout.
Okay, next one's MX1.
Tough one to catch, these ones. It's really buying. You almost preempt. You got to get that move. You kind of got to preempt the strength because it comes from lows below moving averages after downward trend. So if someone's got on there and got the rally, well done. I wouldn't be a buyer at these levels. I'd want to see how it consolidates, let the moving averages cross and just start to turn higher. See if you can get established above the moving averages. Like, we get a bit of sideways consolidation while the moving averages catch up, and then a bit more strength. Maybe I could buy into that. But I want to see whether it can hold on to those gains. Like we have seen this before, where it rallies above the moving averages, comes back, but then just loses it. So I want to see the consolidation, but then I want to see the break higher from that consolidation to consider buying it. But if I did get in early, great. I'd continue holding and see where this goes, and I'd risk giving back pretty much all of that move for the potential of staying on something which you never know could turn into something much larger. But the odds are probably against it turning into something much larger. But it's you never know. You never know where a trend is going to take us. So it's interesting to keep an eye on.
Okay, CNB, please, from Roger.
Yeah, one of mine, and it's not like I've got this one myself, and it's not performing at this point. I'm in from I think early July. It's still above my stop loss. It's inside my time stop, which is 60 trading days. So I'll continue to hold it for now. I can give this a bit longer. I wouldn't buy it if I wasn't already in it. It needs to stabilise and get itself back above the moving averages, consolidate, and then start to break higher. So there's a few things to happen before I'd consider buying if I wasn't already in. But being in there already, I'm prepared to give this a bit more time and see if it can do what's necessary to get a trend going. It's certainly not without potential, but that momentum which caused me to buy, it's unfortunately hasn't immediately kicked on. It's it's probably on the endangered list, this one, but it is holding in well enough to continue holding for now.
Okay, RHC.
Yeah, this is interesting. We've got this sideways consolidation along the moving averages, and the moving averages are trending higher. You can see it's done the flip from below to above. It's I'd be looking for if I was in this, if I'd bought this initial break higher, that's fine. I'd be holding it because it's doing nothing wrong at the moment. It's had that initial run. Now it's got that sideways price action. I like sideways price action because it suggests there's that buying support and it's holding onto those earlier gains. For me to want to buy some more, I want to see a break higher from this sideways consolidation. So maybe up around 39.90 thereabouts, like 39.85, 39.90 thereabouts. You can get a break above that high from late July. Maybe it's like a rally, sideways rally, and then we start getting an upward sequence. So, I think this is an interesting stock to watch. And if someone's not in it and interested in it, I think there's, watch it, see if we get that breakout. Maybe we get an entry opportunity.
Okay, DUG.
It's not quite doing enough it hasn't triggered a motion trader signal as yet. It was a great motion trader stock from past times, and I was in this one as well and hit the trailing stop late last year, so it's been out of the portfolio for a while. And it's been out of sight for a while below the moving averages, but now it's back above the averages. It's trying to get established above the moving averages. The moving averages have just crossed. It's got to get a bit of upward momentum now to trigger an entry for me, trigger a motion trader signal. A break above the July high would go close to giving that momentum. So I'm not quite ready to move on this stock yet, but if it can hold and doesn't give away too much more ground, breaks lower again, then could start drifting away. But if it can hold these current levels and then get that break above the recent high, that would be enough momentum to say maybe this is worth a go.
All right, PWH.
Yeah, it's got the makings of something here. The averages have crossed. We're above the averages. initial pullback and a rally. Like this is, if I had this one, I'd continue holding it. It could be considered as a buy at current levels, I think. So looking at that, could probably need maybe like an 18% stop on it, maybe. So maybe buy at current levels. Alternatively, maybe we could get maybe we could get some sideways consolidation while the averages catch up as well. So that's the thing with buying now. Like maybe you got to sit through some sideways consolidation. That's not a problem. But that sideways consolidation could provide another entry setup, whereas buying the dip back to the averages or buying the breakout from a possible range. But yeah, it's a stock I'd be happy to run with at this point.
Okay, last one's from Victor. GNP, please, Jace.
And I've got some of this myself. Had it for a while. Motion trader stock, initial signals, way back somewhere in 24 or 23. It's been a great trend. I'm happy to stay on it. Just been letting the profit run. Sat through a lengthy consolidation. What was that? 6 months of sideways consolidation. That's why we use wide trailing stocks. We're patient with our winners and let them consolidate, and then it's run again. I'd struggle to buy some up here. It's pulled away from the moving averages. It's like I prefer to buy rallies off the moving averages and breakouts rather than once they've already run. That said, there's buying into strength often leads to more strength. But I'd find it difficult to buy it here. For me, this is a hold. This is a profit to let run with that wide trailing stop. That's a strategy that's been working for me. That's a strategy I want to keep applying.
All right. Fantastic. Thanks, Jace, for another mammoth show. Over 30 tickers we just analysed then, as we probably do every week. Amazing value that you have provided us over these couple of years, Jace. So once again, I'm thanking you on behalf of all the viewers as well as myself, right? So thank you once again, Jace. Thank you for all our viewers for coming along. Don't forget to hit that like and subscribe button and write a nice comment below as well. That'd be great to hear. And if there's any questions, feel free to put them in the comments as well beforehand, and we'll visit them next week. Otherwise, thanks, Jace.
Hey, thanks for that, Rog. Thanks, viewers. Thanks for coming along and joining us. That's all been fun. Some really interesting stock codes you've given us this week, and I look forward to coming back, and we'll do it next week.
Fantastic. Well, have a great week in the markets, everyone. Take care, and we'll see you.